It gives me a great deal of pleasure to introduce our speaker today here at the Reischauer Center for East Asian Studies. I'm sure there'll be others who are in class and coming in a bit later, but given that we have a very interesting speaker today, I'd like to get started. Our speaker, Dr. Albert Park, is currently Chief Economist of the Asian Development Bank and also Director General of its Economic Research and Regional Cooperation Department, which makes him, of course, the chief spokesman on economic and development trends and the designer in many important ways of the knowledge products and support for regional cooperation at the ADB. He has more than two decades of experience as a development economist and specializes particularly on the economy of the People's Republic of China. He's worked on a broad range of development issues, including poverty, inequality, intergenerational mobility, microfinance, migration, and labor markets, as well as, of course, foreign investment across the region. And he's also currently a chair professor of economics and director of the Center for Economic Policy at the Hong Kong University of Science and Technology in Hong Kong. And today, Dr. Park is going to be speaking on the most recent Asian Development Outlook issued just this month. And he's here in Washington, but also will be speaking in New York, in New Delhi very soon, in various locations around the world to present the most recent analysis by the ADB, which you can see right here, a development outlook. So it's a delight to see you here, Albert. We're honored to have you with us, and we look forward to what you have to say.
It's a great pleasure to be here. Let me make sure this works. Okay, perfect. So every year in April, we launch our annual Asian Development Outlook report, and this report builds on a lot of monitoring and analysis of what is happening in every country in the region. So we have country economists based in country in every location, and we have a macroeconomics research team, and together we kind of sort through what's happening on the ground, what are the most recent government policies, and then what's going on globally, and how will the global factors, what's happening in the US, Europe, et cetera, affect the prospects of the country, given what we know about the country's own kind of local circumstance and policy directions. And this leads to the assessments that get aggregated up to, the outlook for regional growth, but we also have outlooks for every single country in the region, which provide quite a nice summary of what has happened recently and what is likely to happen in the coming year or two. So the subtitle of our report this year is an optimistic one: brighter prospects amid ongoing challenges. And so let me start with a slide that presents some of the key messages. First, the PRC's reopening and shift away from zero COVID policy will improve growth and regional prospects in the region compared to last year. Second, the rebound in manufacturing and exports gradually weakened late last year as activity in advanced economies softened. But more recently, the business indicators suggest there are some improvements this year. Third, the PRC's recovery and healthy demand recovery in many of the economies in the region, really still recovering from the pandemic, will support growth both this year and next year. So our headline numbers are that growth in developing Asia is projected to rise from 4.2% last year to 4.8% both this year and next year. Fourth, as supply pressures have faded, we expect inflation to decline from 4.4% last year, which was lower than in most regions of the world, including here in the United States. Declined to 4.2% this year and 3.3% next year, coming down towards pre-pandemic levels. And finally, the upside risks are that PRC's reopening could be even stronger than we are currently projecting. But there are other challenges, especially the risk of policy tightening in advanced economies and heightened financial stability risks related to high debt levels, the banking crisis we've seen recently in the US and Europe, and the evolution, of course, of the Russian invasion of Ukraine. So now let me spend a little bit more time walking you through some of these points in a little bit greater detail. So this chart shows the contributions to half-year growth rates in 2022 for 10 regional developing economies that have quarterly data, which together account for something like 90% of the region's GDP. And it's a kind of a busy figure, but I want you to take away two key points. The first is that net exports declined in key tech exporters, including the Republic of Korea, Singapore, and Taipei, China. These are kind of to the left side of the figure. And this is shown in the orange color in the bar chart, which is the net exports. The decline was due to a weaker global outlook. Growth decelerated in these economies last year and are weak, likely to be weak this year. However, the second point from this figure is that growth was strong last year in four large ASEAN economies: Indonesia, Thailand, Malaysia, and the Philippines. In these countries, growth last year was driven by consumption, shown in the green, and investment, shown in the blue, which really is kind of a return and recovery of demand from the pandemic. Now, manufacturing production recovered strongly early last year. However, the trend weakened in the second half of the year due to declining external demand. So in the left-hand side chart, you can see that the year-on-year growth in industrial production for key manufacturing exporters other than the PRC reveals a declining trend in growth since the fourth quarter of 2022, and quite a few countries spilling into negative growth. The right-hand side table, which is hard to see, so just look at the color shading there. It shows the Purchasing Manager Index, the PMIs. So here green indicates improvement and expansion, and red indicates decline. And one thing you can see is that the PMIs worsened between the last quarter of 2022 and January for a number of the key exporters. Again, these are kind of towards the bottom of the table. However, the latest readings from February and March, which are the last two columns, suggest that there's some improvement in manufacturing for a broader set of economies. Not all out of the red, but not as dark a red as in the second half of last year. So it's a sluggish kind of recovery that mirrors the slow growth occurring and external demand coming from advanced economies. Now, if you look at the merchandise export data itself, it also reflects this weaker external demand in the second half of last year. And so the contrast is tourism, which has shown steady recovery. That's on the right-hand side. So the left-hand side chart plots the nominal merchandise exports for the PRC in red, key technology exporters in green, and developing Asia, excluding PRC, in blue. And all of them dropped off in late 2022, especially, again, for the key technology exporters, although this followed very strong recovery in the previous year. The right-hand side chart shows the visitor arrivals by sub-region, and so we can see tourism is strongly recovering across the region. It recovered a lot last year, and it's on track, we think, to return to pre-pandemic levels in most of the sub-regions this year. thanks also in part to the PRC's reopening and the return of Chinese tourists. Looking at financial conditions, they improved starting in November of last year, but have tightened again in February and March. So the left-hand side chart in the orange line plots the VIX index, which measures market volatility. And the VIX declined from November of last year, reflecting lower uncertainty in the U.S. stock market due to a less hawkish stance of the Fed. At the same time, the blue line shows that the equity markets in developing Asia went up from November of last year on the improved sentiment of equity investors. However, for both lines, you can see the easing of financial conditions has lost momentum since February. And this has been due to new uncertainties over the pace of monetary tightening by the Fed due to inflationary pressures in the U.S., and also in March on concerns over the banking system in the U.S. and Europe. The right-hand side shows exchange rate movements of regional currencies. The blue bars show that there were large depreciations from January to September of 2022, often 10% or greater. But the green bars show that since October of last year to March of this year, more than half of the currencies have appreciated. Now, with respect to kind of fiscal and monetary policy, if you look at the fiscal positions, changes in fiscal positions plotted on the left-hand side, this shows the change in fiscal balances from the previous year. So the green dots are the changes in fiscal balances from 2021 to 2022, and the orange triangles are the expected changes from 2022 to 2023. And you can see that last year in many countries the fiscal deficits widened, as seen by many of the green dots being on the left side of the chart. But this year we expect the fiscal positions to improve somewhat, as shown by the orange triangles mostly being on the right side of the chart. That's because tax revenues are recovering with economic growth and spending related to the pandemic is declining. Now, regarding monetary policy, the right-hand side chart shows the direction of policy interest rate decisions of central banks in Asia. The red means interest rate hikes, blue is holds, and greens are cuts. Last year, the majority of the rate decisions were hikes, and those hikes averaged 86 basis points when they occurred. Now, policy tightening has eased in recent months with inflation slowing down in the region and less aggressive Fed tightening. Most decisions, and this is like the right two bars, most decisions this year have been to keep interest rates unchanged, and when they do hike interest rates, the magnitude has been much smaller than last year. Now, we expect global headwinds that constrained growth in developing Asia last year to continue into this year. So this chart shows key assumptions about the U.S. interest rate, global energy prices, and global food prices that inform our outlook for the region. The left chart shows that monetary policy will likely remain tight in advanced economies. This will dent growth in the euro area and in the U.S. this year. So, like many organizations, we're expecting growth both in the U.S. and Europe to be less than 1% this year. The middle chart shows that energy, oil, and gas prices will remain high as the EU sanctions on Russia further tightened in December and January. And of course, we have the recently announced OPEC supply cuts. The rightmost chart shows that food prices will likely remain high this year, but less than last year. So the PRC's reopening, as I said, is expected to improve growth in the region compared to last year. And this is because, obviously, PRC's own growth will increase, but because of linkages through trade and other channels, this will also brighten prospects for other countries. The left-hand side chart here shows that since the PRC abandoned its zero COVID policy in December, the number of subway passengers has already exceeded pre-pandemic levels. So this suggests that domestic mobility of residents in the PRC has already returned to normal. The right-hand side chart shows that the rebound in the PRC varies across manufacturing, services, and construction sectors. The red line shows that services are seeing the largest boost, driven by contact-intensive sectors such as hospitality, leisure, and transport. Manufacturing also rebounded as supply chain issues resolved after the lockdown ended. We expect that growth in the PRC will accelerate from 3% last year to 5% this year and 4.5% next year. The 5% growth forecast is 0.7% more than the forecast we made before China ended its zero COVID policy last year, and is the same as the government's own projection. We expect, so this right-hand table presents a lot of the main projections of growth in the different subregions and some of the key economies, although I apologize, it's a bit hard to read. So let me summarize some of the key points. In the Caucasus and Central Asia, we expect growth to slow down after a very strong performance following the Russian invasion of Ukraine last year. In East Asia, we expect growth to accelerate, driven by, of course, faster growth in the PRC, but we expect growth to slow considerably in Republic of Korea and Taipei, China, on falling demand for electronics. South Asia will remain the best performing subregion this year, driven by robust growth in India, which will be high both this year and next year. So we're projecting 4% and 6.7%. In contrast, we forecast growth to slow pretty dramatically in Pakistan, which is having debt sustainability issues, and to be negative in Sri Lanka. For Southeast Asia, growth will normalize as weak global demand weighs on exports, and despite a slight boost from tourism, but still reasonably steady recovery in domestic demand. And in the Pacific Island region, lower commodity prices will weigh on growth in Papua New Guinea, which is the major economy in this region. You may not be so familiar. But for many countries, actually growth in the Pacific is going to turn positive for the first time after several years of negative growth, supported again by resuming tourism and infrastructure projects. Turning to the outlook for inflation, regional inflation is expected to come down after peaking in the second half of last year, as shown in the left-hand side chart. Next year, it will fall back close to pre-pandemic levels. The slowdown in advanced economies will lower price pressures globally, and domestic inflation expectations in the PRC remain well anchored. In South Asia and Southeast Asia, inflation is expected to decline slightly this year. And in the Caucasus and Central Asia, inflation will slow down on easing supply chain constraints and falling commodity prices. So let me conclude my presentation, so there's plenty of time for questions, by discussing some of the key risks to the outlook. First, we feel that the PRC's reopening could generate a stronger than expected rebound of domestic consumption, which would have positive regional spillovers through trade and tourism. So there is clearly an upside risk to what may occur in the PRC. Second, slower than expected disinflation in advanced economies would push authorities to a more hawkish policy stance, which would be detrimental to growth prospects in Asia. Third, higher interest rates could expose vulnerabilities from high debt levels, and there are also financial stability risks related to banking crisis, et cetera, that could undermine the growth outlook. And finally, the Russian invasion of Ukraine could further escalate, renewing food and energy security challenges. Other more kind of intermediate range concerns include fracturing of the global production system, which could affect trade, employment, and productivity, and of course challenges from frequent extreme weather events we're seeing with climate change, and from decisions made related to the transition to net zero. So let me stop here and open the floor to questions.
Anyway, we have these summits, and a lot of people in the U.S. government, of course, are saying this is almost an ideal year from the U.S. point of view globally. We've got first the Hiroshima G7, and then we have the G20 in New Delhi, and then we've got APEC in November or so in San Francisco. So they all relate to Asia Pacific in important ways, or they're all in this region.
Sure.
Broader concerns. What do you think what you've said today about prospects means for policy agendas?
In these different forums, yeah, it's an exciting time. At the Asian Development Bank, we've been very engaged in especially the G20 processes, because last year it was Indonesia, and then this year it's India. So two of our large major economies in the region have been hosting, and we have a lot of ongoing interaction with the leadership groups and the research think tanks in these countries. And so we've been involved both in the G20 process and then for research in something called the T20 process, the Think Tank 20 process, which is a parallel set of activities where key policy research organizations come and try to design a set of policy recommendations that go into informing the G20 policy deliberations. And I've been directly a part of that T20 process as a co-chair of task forces both last year and this year. I think the G20 really is an important forum for emerging markets and less developed countries to have a greater voice in the global policy dialogue that goes beyond just the perspective of the advanced nations. And I think some of the consistent messaging that started in Indonesia and I think is continuing in India's leadership is one, a commitment still to multilateral open trade, to reinvesting in WTO. Of course, many countries, especially in Asia, have benefited from open trade and export-led development in the past. And there is still, despite all of the global narratives of deglobalization, friendshoring, reshoring, et cetera, I think in Asia, there's still a commitment to economic integration. We have the RCEP agreement, the Regional Comprehensive Economic Partnership, which includes all of the key economies in Asia Pacific.
India.
Except for India. Sorry. All of ASEAN, Australia, New Zealand, Japan,
they're also
Korea,
one of the most
China.
rapidly growing, as you said.
They are. Well, India, I hope India will also join. I think there's some discussion, but India for many years has had a bit more of a protectionist instinct or a less willingness to really open up its trade. And you still see this in a lot of the policy dialogues in India. At the Asian Development Bank, we've, since our founding, we've been a very consistent proponent of more open trade and investment and regional economic integration, which we think, especially in an age of global value chains being much easier to link production across countries, provides more opportunities, especially for poorer countries, to enter into global trade by specializing in certain parts of the global value chain.
You've been supportive of CPTPP.
Yes, I mean, broadly, I think we're supportive of all engagements that try to promote cooperation and more open trade relationships. We're also supportive of IPEF, the U.S. Initiative, the Indo-Pacific Economic Framework, right, which has 13 partners in Asia. And I think the more that any of these frameworks can promote common standards or understandings that can promote, facilitate better trade arrangements, I think that's all for the better.
Could I infer then from what you've said that with these three major summits that we have, that at least as far as ADB is concerned, that pushing for more openness, more opportunities for investment, coping with bottlenecks that are causing inflation to spike, and maybe infrastructure, supporting infrastructure investment. Though, broadly speaking, those are the kind of general suggestions that you would have.
Absolutely. And of course, the G20 is not just about international trade. There's a wide range of policy issues that are covered. And the other area, which was a main point of the Indonesian presidency and which is being carried on by India, is also in climate change and climate finance. And of course, there are very challenging issues about transiting from coal-based power, which is still important for the big three, China, India, Indonesia. But I think there's a desire to still think about what is the kind of cooperation that is needed to make progress on those issues. And of course, there's long-standing debates about the role of developed countries in helping to finance the climate change mitigation and adaptation in developing countries. And there's been new discussion of that. But that's also very much now on the top of the policy agendas.
Just one other question that I just can't avoid, and then we'd like to open it up. There's been some talk recently about, this is obviously a short-term forecasting, or 1 to 2, I guess, intermediate short-term forecasts. An issue that one hears about quite a bit recently, though, is the issue of longer-term growth across Asia. You know, some of the conference I've been recently have been saying, well, the old target of 2% inflation, or you know, a target of 2%, we perhaps inevitably will have to move to 3%, or we're going to have higher inflation. We may well have higher interest rates, partly because of, well, for a range of reasons, and consequently, you know, and then the uncertainties of deglobalization. And not to mention all the potential political complications that could impede growth, and then also climate change that you mentioned, that really the forecast for Asia has to be a significantly declining rates of growth, and perhaps higher inflation and higher interest rates than we've seen. I wonder if you have any thoughts about all of that.
I'm not so pessimistic. I'm an optimist by inclination. But what you say is true. In fact, there was a pretty gloomy World Bank report issued very recently where they said by the end of this decade, you know, the global potential growth, not just of Asia, but of the world, is going to be about as low as it's ever been, at something like 2.2% global growth. And they attribute this to some of the factors that you mentioned: falling productivity, higher interest rates, more costly investment. And I think in Asia, the view is a bit more optimistic. So for one, although China's growth continues to decline, sorry, excuse me, I gotta stay really still, I guess. Take this out, maybe. Maybe it's rubbing against this. That'll do it. Okay. So, of course, growth in China, which was double-digit for many decades, is now 5% this year and has been trending downward. China may get above 5% if there's robust recovery, but still the trajectory is for slower growth in the future due to aging of the population, due to kind of exhausting some of the potentials of catch-up growth and needing
maybe
to rely
some
on
unwinding of global interdependence, or interdependence with China might be part of it.
To some extent, although it's now a large enough economy where it has been for a number of years and now will be shifting more toward domestic demand-driven growth, which of course in an economy its size can still be quite sustaining. But,
Sure.
But we see robust opportunities in other parts of the region. So India, for instance, is enjoying a demographic dividend. It's a young population. We're seeing very robust demand growth. Some of the government policies have been very, they've invested a lot more in infrastructure. They've been more actively trying to support industrial development, sometimes a little bit too much in a planned or industrial policy way that I'm not sure how efficient it will be, but certainly the instinct, the policy dialogue in India is quite different now than it was, let's say, a decade or two ago, where there's much more of a focus on growth. So we expect that to be, so some engines of growth will shift away from China to other sources. Indonesia, too, is still quite a dynamic economy, especially in the high-tech space, online activity, and that's true in other regions. So let me give you another bright spot for the reason, just to counter the
pessimism.
Every time we come to Washington for the spring meetings, everyone says it's so pessimistic. But when you're coming from Asia, it feels a little less pessimistic and a little more optimistic. And the one thing I wanted to point out is digitalization, right, which we know is a global trend which accelerated during the pandemic. But digital services trade is the most dynamic part now of international trade. And Asia-Pacific region is the one region of the world that has seen its share of this trade increasing over time. Of course, there's still a lot of challenges for digital connectivity, but I think there's potential here also to generate new opportunities.
How about services?
Well, a lot of digital trade is in services.
Oh, yeah, sure.
So for instance, some of the more dynamic, one of the most dynamic sectors in several of the countries is business process outsourcing services, like call centers and other types of logistical support outsourced to countries, well, globally, really, but in Asia in particular, the Philippines, India,
protectionism
are
isn't going to hurt this.
doing very well in this aspect. Excuse me?
Protectionism isn't going to cut that back.
I don't know. I mean, I think there is kind of seems like a global move towards more intervention in trade for political reasons, geostrategic reasons, or to protect domestic workers, many motivations. But at the same time, the efficiency of international exchange and the extent that trade networks have developed and supply chain networks have developed has become so sophisticated that to be competitive in a global market, still there's a strong resiliency to maintaining efficient patterns of production, right? And I think that combats a lot of the protection instinct. And if you're in Asia, you definitely feel that despite the sanctions kind of coming from the West and the US-China trade war, within Asia, you see greater economic integration over time. You see still this instinct that we should be open, not we should be closed. Right?
I see.
And
So-
of course, they would like that to be global, but they have less control
see.
over all of that.
So more integration within Asia itself, despite perhaps some of the broader trade frictions that we have across the Pacific and so on.
Right.
Sounds
And
like.
I think we're seeing evidence that that's happening.
Well, we've got an interesting subjects here and, more time to talk. I see a question right there. Could
question.
people identify themselves and then go right ahead? Why don't we take maybe a couple of questions at a time? Okay, please, go ahead.
Can you all hear me okay? Hi, thank you very much, Dr. Park, for this very comprehensive and insightful presentation. My name is Benjamin Sokol. I'm a first-year Master's of Arts International Relations student specializing in energy in Asia. You had talked about the prospect of high energy prices for Asia given the war in Ukraine and other factors. I was wondering if you could talk about how those energy prices generally will affect Asian development plans with respect to clean energy development and their general power development plans, particularly for East Asia. Thank you.
Okay, clean energy prices and clean energy. Okay, maybe one more question. Yeah, please.
Okay. Thank you so much for your presentation. My name is Shu Fukuya. I'm a second-year doctorate student at SAIS. My question is about policy coordination with the bilateral financial institutions. If you have any ideas, like in terms of like financial coordination with the other bilateral institutions, for instance, in Japan, we have a Japan Bank for International Cooperation. in Korea, I think we have like a Korean Exim Bank and China Exim Bank and so on and so forth. So, and then there are a lot of potential needs or financial needs in Asia. It's obviously impossible, to be covered by the Asian Development Bank only. So I think it needs to have, policy coordination. So, do you have any potential or actual policy coordination or financial coordination among them? Please let us know. That's appreciated. Thank you.
Okay, policy coordination and then energy prices.
Okay, so responding to the impact of high energy prices on the kind of transition to net zero, I think it's positive in the sense that if energy prices are high, it should create a greater incentive to make investments in cheaper sources of energy. And one thing that's been very obvious is that the cost and return, of renewable energy is extremely competitive now. It's actually much more efficient to produce energy using renewable technologies than the traditional fossil base. And that advantage is made even greater, if the energy prices are high. That said, of course, if you're producing these oil, and there might be an incentive to produce more of it, which slows down the traditions. So you need to be very clear about which countries you're talking to. And in the short term, I think if you're an energy importer and the prices are really high, if you're an oil importer, you may say, oh, I better switch to cheaper coal for a while, because maybe the renewables are not online. And none of this works unless renewables that we can scale up renewables quickly, right? And of course, at the ADB, we feel that the renewable investments should mostly be coming from the private sector, because these are high return investments. But oftentimes, private sector renewable investments in many countries and regions require a lot of other types of support, because the way energy is priced, the way that the electric grids in different countries are developed and allow connection to different types of energy sources. These create lots of risks and uncertainties for renewables energy sector, let alone other kind of regulatory requirements about foreign investment, about just various types of regulatory burdens that maybe have not yet been streamlined to really supercharge.
So as a result, we're actually getting more and more reliance on coal, aren't we, recently? Say, since the Ukraine war began.
I don't think that's true. I don't know if that's not true, but I think still, like in Europe, I think the shift has not been to coal for certain. And
I wonder about Asia. Do you have any sense of that?
Well, in Asia, it's hard to say, because I think the transition away from coal hasn't really started in large
like
sense.
in India, Bangladesh, places like that.
Yeah, so they continue, but they have not announced big coal conversion plans yet. And one thing the Asian Development Bank is trying to do is to try to construct financing vehicles to help provide incentives for governments to support the early retirement of coal-fired power plants. So we have something called the Energy Transition Mechanism, which tries to create a fund that incentivizes early retirement of coal plants, and at the same time supports the investments in renewables to kind of compensate for the lost energy from coal with new energy from renewables. And so that's something we're working on, and other donors and actors are also trying to work on this problem of the transition from coal. But it's still not that easy, and I think especially for rapidly growing countries, they feel we're going to need more and more energy from multiple sources. It's not clear when we're going to be ready to shift away from coal.
One of the biggest problems, isn't it? Just that the need is growing so rapidly, and as you said, there's a question of scaling up quickly. That's hard.
Right.
And so that forces you back into coal, even if, despite all of the negative environmental externality.
It is, but there's now quite a lot of if I should say energy around encouraging more shift to renewables. It's very competitive, and there's lots of I mean, we're trying to construct a variety of innovative financing vehicles that with blended finance from different donors, both private and public, and combined with commercial finance to make it attractive. So there's still quite a lot of potential. And then there's a whole private sector, green bond, sustainable bond movement that's growing fairly fast. And one thing ADB is also trying to do is really support the institutional capacity development to support the rapid growth of green finance in the region, to also incentivize more companies to be cleaner. So there's still quite a lot of, I think, potential, but a lot of challenges at the same time.
You had the
second
cooperation
question. Yeah.
question.
So
yeah.
on the cooperation
Relate.
question, there's already quite a lot of cooperation in the sense that, so for example, I had an opportunity last year to visit Uzbekistan, and I visited at a time when there was a multi-donor group meeting with the government on trying to agree on what the high priority areas were for reform and for support from different donors, both multilateral and bilateral donors. And then a set of working groups had been created for each kind of targeted area of reform with interested parties, both from the government and from the group of donors. And the whole point of this was to try to make sure that things are done in a coordinated way, both in terms of supporting the government's plans or helping them achieve some of their goals, but also among the donors, not fighting each other for the same business and trying to. The extent to which that works well will obviously vary, both depending on the country and depending on the organizations, right? So, at the spring meetings last week, IMF, World Bank, there was quite a lot of discussion about coordination of debt burdens, right, and debt relief for multilateral banks and for bilateral donors. Again, there's attempt to collaborate, but there's also disagreement, so a need to also kind of negotiate and talk things through. So it's good now with the pandemic over. This was the first year of the spring meetings. All the delegations were coming in person, and everything was in person, and so you could have some better real person dialogue on some of these issues, and hopefully progress was made.
Mm-hmm. Okay, we saw one question there, and then maybe a second over here. And then.
My name is Masaki Yoshimori, so JHU, Department of Economics. I have two questions. One is I agree, so upside risk to a Chinese growth economy. So, but however, so it's IMF report said, so it's this growth is one factor. So consumption rather than investment.
Right.
What do you think? So future. So it's next year after next year. This is not a discussion about aging of population. One more question. So it's BOJ. So it's Bank of Japan. So I'm not sure. So it's they will make a decision. So rising the interest rate. So this is credit worth. So some specific countries. For example, Indonesia, Malaysia, so it's Japanese investors hold, so those countries are bond. So this is, I'm not the optimist, Asian countries, so if credit was risk, so what do you think about this issue? I don't talk about a shadow banking issue, so but
Sure.
my question.
Okay, thank you. Take one more over there.
Okay, yeah. And let's make it just one, everyone, just so that everyone can, that's fine for now, but yeah, one question, please.
I'm Morgan. I'm one of the policy research fellows here at the Reischauer Center. And I did have two questions, but I'm going to take a second to process.
Let's hold it to one.
Yeah. So my earliest question was, you commented on the tourism recovery and that it might go back to pre-pandemic levels, but I'm curious about your thoughts on whether or not we might exceed pre-pandemic levels once China starts fully opening up.
Thanks.
Okay.
Okay, so let me handle the first two questions from my fellow professor. By the way, I always like speaking at universities because I've been a professor myself. It's much better than the stuffy government events. Anyway,
We like to have you here
the
too.
questions are very diverse and very interesting. So the first is kind of China shifting from investment to consumption. And that has been a longstanding objective of China's macroeconomic management. And they've received this also consistent advice from many outside experts and organizations. And they've struggled to do it. And they're still kind of in the process of trying to achieve this shift. Of course, COVID was kind of a crazy period, so it's hard to know where it leaves the country. But I think in some ways it should happen in a natural way. Some people feel, the returns to investment have declined. China's also trying to de-lever like the property sector to avoid over investment in real estate projects and whatnot. So all of these are parts of the effort to shift more to consumption. I think a lot of people feel that they still can do a lot more on the government expenditure side to support transfers to individuals for healthcare, social protection, education, these social expenditures which support consumption, government and household consumption. And so I think there's some progress, but I think what has happened in the past is two things I feel. I mean, having just watched this happen for a long time. Number one, the Chinese consumer is pretty stubborn. They like to save. And part of it was to buy housing and whatnot. And so that's been, I think, part of the challenge. And some people argue that also they still face a lot of uncertainties about their retirement, about health, and some of the other social insurance programs are not reliable enough, especially in rural areas, that otherwise people will feel they have to save themselves, right? So this is another argument it's hard to really be very definitive about the relative importance of these different aspects. So that makes me still feel that it will continue to be kind of a gradual process in accomplishing that. But given that this global competition with the U.S., there's really also an incentive to invest more domestically and not, and there may be less opportunity in exports to some extent, and especially other regions are becoming competitive in more of the export markets. Then maybe that will also shift more of the growth to the consumption sector. So we'll see. I also feel like one thing that's not that well appreciated is that younger consumers in China and in most rapidly developing countries are bigger spenders than older people. So as younger people get older and more people have grown up with you'll see kind of a natural increase in the willingness to spend. But that's a slow process. Obviously. Then the second question was about Japanese interest rates and bonds. I'm not expert enough to comment definitively, but one thing I'd like to comment here is that one thing that's happened in Asia really from the Asian financial crisis and beyond, and partly supported by other things that we're doing at the AB, is the development of local currency bond markets. So much more of the debt of governments is in local currency. And so that kind of prevents these economies from being so subject to hot flows of money responding to interest rate changes in other countries, whether it be the US or Japan or elsewhere. And we continue to strongly support the development. And we have an Asian bond monitor project and regular reporting to try to continue to monitor that situation. And the question about whether tourism recovery will surpass the previous. So there would be two reasons why you might expect kind of overshooting. One is you have so much pent-up demand, right, that people who haven't traveled for 3 years, they're going to like all go on trips and then maybe come back down afterwards. So you may have an overshoot. But the other thing you might think is that despite all of the setbacks of the pandemic, overall, GDP per capita levels are higher than they were in most regions, right? Not every region, but sub-region. And so there's just this natural process of the middle income, the middle classes in these countries continuing to expanding and to grow and to travel more, right? So you'll have this more structural continued increase in tourism, which will definitely be more than before the pandemic. I'm not sure how long it will take for that, but these two forces suggest, being bullish on tourism. So I think that's possible to some extent, although, I think we're still, to be honest, I think trying to understand what really happened during the pandemic. So putting my research hat on, one of the challenges is that during the pandemic, not many household surveys were actually conducted to really document the poverty and income changes in income distribution. We try to guess at those, and the World Bank and other organizations, by taking pre-COVID surveys and then assuming things about income growth or GDP growth, and then saying, oh, this would set back poverty this much or whatnot. But we don't really know for sure until we start getting more data in. We're starting to now that surveys are kind of back in the field and whatnot. And without better insight into that, I think it's hard to know how different types of spending or activity, including travel, will respond.
Now, one last range of questions, I guess. Let's take them all together. I see 3 hands, but
In the front.
just one question, 3. 1, 2, 3. Okay.
My name is Inada. I'm a professor of Japanese University, Essential University, and just moved in Rachel Center as a visiting scholar. Thank you very much for your prospects on macroeconomic prospects in Asia, and I would like to focus on the real economy of Asia. In fact, I have 2 questions, but I focus on one. In Asia, the needs for financial resources for infrastructure building is still huge. Many experts mentioned that Chinese BRI investment infrastructure building has been huge, but in last few years, that amount of BRI investment to Asia has been decreasing. And what do you think? How do you estimate the impacts of the stagnation of Chinese investment, especially for infrastructure building to Asia, or are we expecting the shortage of the financial resources infrastructure investment in Asia in the near future, or other donors can supplement or cover the huge necessity of the infrastructure building in Asia? That is the question.
Thank you. Okay. Infrastructure investment, especially Chinese.
Thank you. My name's Ann Vroom. I work for an entity that does private equity advising. I had like 7 questions, but fortunately, mostly they've already been asked. But the remaining question is, you mentioned concerns about debt relief. And, having observed many World Bank and IMF series of meetings, debt relief seems to be always an issue, greater or lesser, depending on the environment. What are your thoughts about why that continues to be a major issue? Are we overburdening these countries with debt for large infrastructure problems? Is it a risk management problem in structuring the loans? I know that's a big question, but just some general thoughts in that regard. Thank you.
Okay, thank you. Debt relief and why this keeps coming back.
Here.
Yes.
Thank you for interesting story. I'm Sarah Sekimitsu. I'm visiting scholar in Research Center. My question is, you talked about the digital economy. So I'm curious that about what aspect of the digital economy, what rules should be organized more in digital economy, such as server issue or free flow issue.
There are a lot of issues. Sure.
That is my question.
Yeah, thank you. Digital economy.
Great.
Okay.
So on the infrastructure, the sufficiency of finance, the Asian Development Bank produced a report, I want to say 5 years ago or so, on Asia's infrastructure needs, and it argued that there was a huge gap in the needs compared to the actual investments occurring in infrastructure. So I think that's still true, especially now with, so you can think of infrastructure needed to sustain growth and productivity, but you can also think of infrastructure we need for the SDGs, for building resilience to climate. So how do you define need? Could be quite broad, but I think regardless of how you define it, I think you'll find there's a big gap. China's Belt and Road Initiative, I think, filled part of that gap. What the Asian Development Bank, other multilateral donors and other bilateral donors do also helps to fill that gap. And yet, there's still a large gap, I think. One thing that, and there's no magic formula for filling that gap. Maybe those needs are too idealistic to say we could fill the gap very completely. One thing that we've also suggested to governments in the region is that they need to increase their domestic resource mobilization through tax reforms or tax increases done in the right way. And maybe they could also accomplish other goals like greater equity, less inequality, or if they had a carbon tax, they could also be supporting the green transition as well as getting some. There are many ways to think about the options, but if you look at the tax revenue collection as a share of GDP in Asia, it's still relatively low compared to advanced economies. So that's part of it too. Now China's outbound FDI and Belt and Road kind of initiative activity has declined during the pandemic years. I think maybe it's understandable given that all FDI declined to some extent during the pandemic, in that it's just harder to finish deals when you can't travel and go. You have to build a new factory or whatnot, and a lot of stuff got delayed or suspended or even canceled in some cases. And that's true of FDI both into China and out of China. Now, whether that reflects some kind of more permanent stepping back by China, or it's just temporary, and once they have more of an economic recovery and more resources, they'll go back. I think it remains to be seen. I think if you think, though, about what's been the intentions that the Chinese government has described and how it talks about its partnerships around the world, it doesn't seem like they are planning to step back, right? And in this world of heightened geopolitical competition between the U.S. and China, I think China will feel more than ever it needs to really be engaged economically with countries all around the world. And you see all of the country leaders all going to China to visit and explore different types of partnership. And in fact, you also see now both the U.S. and Europe trying to increase their allocation of funding to support infrastructure and other investments in key partners in the developing world. Partly in response maybe to the China competition threat. Hopefully also because they feel that it's the right thing to do. And my hope is that, as this is mentioned earlier, that when these whether it's U.S., Europe, or China, or Japan, or any countries going into a country to try to support infrastructure or other investments, that they work together with the country's interests at heart, and not with a view that. Not with a geopolitical view that, do this, but don't work with them, where they're trying to make it more of a zero-sum game. I don't think that would be good for, from the standpoint of the welfare of the region. Okay, so your question is on debt relief. I don't think that, so there's a lot more countries which are experiencing issues related to debt sustainability, but it's because we've had a crazy last few years where we've had huge shocks to growth, right? And now we've had this, and we had the war, the invasion of Ukraine by Russia, which has created this crazy commodity price shock, which has put a lot of pressure on governments in this sequence of global shocks. And yet, I think most countries, at least in Asia, have weathered this pretty well and have managed their macroeconomies pretty well. And we don't predict that they're going to have some debt crisis. A lot of them have reduced reliance on foreign hot money, foreign denominated currency, and more on local currency bonds. But they've also managed their macroeconomies better, both in terms of monetary and fiscal policies, with less deficits. And so I think it's not like we've done something systematically to put them in these debt traps. I don't believe that narrative at all. But we're just in a circumstance where, because of the recent history, more countries are at levels which are reaching these kind of sensitive points where you could imagine if they get hit by more and more crises that some of them could really struggle to maintain debt sustainability. And the countries that have had the problems, like Sri Lanka, which had a debt crisis, that's the country in Asia that has kind of toppled over, if you will. That is a country where the macroeconomic management was very poor for many years before the pandemic. So that was, they could have even muddled through if they hadn't hit by these crazy global shocks, but they weren't. They were in a vulnerable position, and then when they got hit by these shocks, they toppled over, right? So I think it's more a lesson about how to manage your macroeconomy in a responsible way. Don't run huge budget deficits when you're growing fast. Really try to accumulate reserves, and et cetera, right? So I think that's more of the lesson. And then the other countries this year with kind of elevated debt and higher inflation and exchange rate depreciation are Pakistan and Laos, for instance. And again, there are certain challenges, but we don't think there needs to be a debt crisis in these countries. Both did better than Sri Lanka in starting to adjust before a crisis occurred. But yet they are vulnerable because of where they are. And Pakistan also had the huge floods last year, which really set them back. And they're still trying to negotiate an IMF deal to put them on a little bit better footing, which we're assuming will happen. And then if they don't get hit by more crazy shocks, there is a path where they can kind of work their way out of it over time. So there's more fragility right now, but I don't think it means that these countries necessarily did something wrong. Thank you. Yeah. And the final question about digital economy. Yeah. So there's a lot of activity now around digital trade agreements, digital economy agreements. There is a digital part of some of the existing agreements, including TPP and RCEP. They're not that specific, and they try to give each country room to do what they want. Part of that language over things like data, where data is stored, and data private. Well, where server issues and whatnot. I think China was insistent on the language being fairly open because it didn't want. It felt it needed for its national security interest to be to reserve lots of options in terms of how they treat their data. But the IPEF, the U.S. IPEF agreement, digital is a big part of the trade pillar for that. They're wanting to engage with a lot of the key partners in Asia on coming up with digital standards. And it's challenging because there's issues about privacy, about how to manage data flows, about how to tax digital trade, these things where countries may not all agree, depending where they are in their interests. And so it's not clear how these negotiations will come out. But I think it's right to think that these negotiations should happen, because the more we can do to promote digital trade, I think it's going to be win-win in a very dynamic part of the economy. There's other aspects of reform that can really help facilitate digital trade, just by making trade more paperless and coming up with just more technology standards to facilitate trade. And especially if you can make it very paperless and easy, then it could also make digital trade more accessible to small and medium enterprises around the world. Just like lots of small enterprises have done great on e-commerce, right? I don't need to build a store. I can just do something simple, sell it online, and that's created a lot of opportunity, which has been very inclusive. If we think about globally, we could come up with digital platforms where a small firm doesn't have to do a lot of crazy, fill 1 million forms in person and deliver them to actually engage internationally, but it was all easy online, and then you could imagine this would be beneficial as well to make global trade and digital trade more inclusive as well. So those are the challenges. Singapore has been signing these digital economy agreements, not just digital trade, but literally like our two economies are going to approach the digital questions in a common framework with common standards. And that could be very powerful, and they've done that with quite a few countries. I think they're leading in that area. So we'll see. It's an active area of negotiation.
Well, amazing tour d'horizon. Thank you very much.
Thank you so much.
Yeah. Look forward to seeing you in 555 Penn. So thanks, everyone. We're back later on. This isn't the last event for the Reischauer Center for the year. So we do look forward to seeing you again. Thanks very much.